What's going on, guys? I want to do a little bit of a trade recap as well as some training kind of mixed in, kind of show you guys exactly what I was looking at. So today in the watch list section around 10 a.m. Pacific Standard Time, I posted up watch SPX under 3882 or 3880. Let me quickly look here. 3881. Okay, so I put on there 3881. Let's go ahead and watch that for a downside flush. I got into this trade. I took two contracts. I wish that I would have held literally all day, but you know, that's the name of the game. That's the way it goes. You're never going to catch the whole move. Okay, and you just kind of have to take whatever profits and gains you get. Reason why I didn't hold a little bit longer is I'd already had a couple of winning trades, so I didn't want to give any profits back. So that's a problem also that you have to deal with too. Once you go up 1-2 trades, especially on a trending day, one trade, bad trade that you hold too long can wipe you out. Okay, I've learned that in the past. I do not want to make that same mistake again. And I'm very, very disciplined, so I'm always okay with, you know, taking smaller profits more consistently. So if that kind of makes sense, you know, I'm not really looking for the 1,000% gainers, the big flashy, you know, 500% gainers that I can go post on social media and Twitter and all that stuff. What I'm looking to do, guys, is come into the market and each and every single day try to pull money out, pull money out, pull money out. Okay, so especially you newer guys, newer people who have smaller accounts, you will absolutely destroy yourself when you try to go for those home runs. Stay consistent, follow your strategy, respect your stop loss, and also make sure you take profits. So in the Discord, I like to say this is a cash flow move, cash flow move, cash flow scalp, right? You may be wondering what that means. So anytime I say, you know, you're able to grab some cash flow, that means that there's a technical setup. And if it confirms by breaking down that technical setup, whatever setup that we're using, right? Could be pre-market highs, could be pre-market lows, could be just some supply and demand consolidation. It could be the 20 SMA. It could be the 50 SMA. Whatever technical reason for entering the trade, if it looks good, like it has room to go, and I'll explain what that means in just a quick second here. But if it has room to go, and I say cash flow, guys, doesn't mean that you need to sit there and hold this trade all day. It means get in, try to get green. If that move goes in your favor, 5, 10, 15 minutes, take your cash flow off the table, right? Take your cash flow off the table. So just kind of getting back to this SPX call out that I did, I was looking at this big gap up that we had, and then we initially tried to push higher. We did pull back into this purple line. This purple line is the 20 SMA. You guys in the Discord know that I love using this indicator here along with the 50 and the 200. But we pulled into the 20 SMA. We kind of went sideways for about an hour and a half. And then, you know, when we had this push and this run up here off the 20 SMA, but we never even made an attempt to at least test the day's highs or let alone put in a new high. Once we started to kind of roll over here and lose the 20, that's when you know that things are starting to change. We could have a short-term change in trend. Now, for those of you guys who are following the 20 SMA strategy, here's one reason in one particular situation, which every trade setup is different, but here's a particular situation as to why I would not have taken this 20 SMA short play. So you can see here, I'm going to speak in Pacific Standard Time. At 9:25 Pacific Standard Time, we get our first close underneath the 20 SMA, and then 15 minutes later, we get this confirmation. So confirmation is when we break down below the first candle close, below the 20, or if we're going long, vice versa, just flip-flop it. So just looking at this chart, this red line here is the 50 SMA on the 5-minute time frame. I know that this is going to act as a pretty solid area of support. So I don't want to take this trade, right? I don't want to get into this trade when we start to confirm, which is here and here, when potentially we could get stopped out here and bounce, and this trade can completely reverse and then go back and touch high of day. So what I would rather do is, if we see here this red line and then we see this orange and yellow line here, these are more demand zones. This is the 100 simple as well as the 100 EMA. So I like this because there's a lot of room down, right? There's a lot of room down. You notice this big gap to be filled here. Anytime we have big space, right? Big space, small space, big space, in this nonsense and confusion, small space, right? I don't want to get chopped up and down, up and down, up and down. I want big space, big space, big space, because when we have big space, if the move goes in our favor, we potentially have a better shot at taking some money out of the trade. So when I started to look at SPX, I noticed, hey, we lost the 20. We've also lost the 50 SMA here. We're kind of just sitting here sideways on this 50 EMA. And right here, if we take a look at this bottom wick, 38.82, right? 38.82. And you can see here at closer to 10 o'clock, which is this little green candle, we're still kind of trickling around. So what I said is watch that 38.81. If we lose that and confirm, we potentially have room down. So we consolidated for 5, 10, 15, 20 minutes. And then finally, here's the breakdown. So I took the move here. I did get a little bit of a back test where we kind of had a little bit of a 10-minute bounce here. Not enough to fake me out because we still were trading below the 20 and still trading below this consolidation here. Continued to hold this, and on this red engulfing candle, I went ahead and took my profits. Why? I also have a level of demand here. So if we kind of look at the bottom, 38.73, and I got in around 38.81. So, you know, we're talking SPX. I'm talking 2-3 contracts on this thing. And again, if you've ever traded SPX, you don't need a lot for this thing to move. Mind you, if I would have held this trade, because technically we're still below the 20, we're also trending below the 5 and the 10, I should have just held this, at least held one runner until we broke above one of those moving averages. But again, like I said, that's the name of the game. This thing would have been a multiple $1,000 profit trade if I would have held. Okay, let me look up exactly how much I took on this trade really quick for you guys, just to kind of give you guys an idea here. So I made $1,100, and what I took was the 38.80 puts. So notice, I tried to get as close to that breakdown spot as possible. The pivot that I put in the watch list was 38.81. I took 38.80s, the closest I could get to that breakdown spot, because I'm always thinking cash flow. I'm always thinking scalp. I'm always thinking quick move. I want to get in. I want the move to go in my favor, and then I want to sell out. Now, mind you, if I would have held these contracts closed at $4,900 a piece. These contracts today went up, and let me just kind of look here. These contracts went up 38.80s. Let's take a look at how much they went up. So 38.80s. 1 second, guys. 1 second here. So 38.80s had a net change, meaning that the contracts between open to close changed $2,000. Now, the reason why I only took 3 contracts, quickly scaled out one on the first drop, and then held the last 2, and then sold one very quickly, and then within a minute sold another one, right? The reason why I only took 3 contracts is they were about $2,200 a piece when I bought them. That's about $6,000, $7,000 worth of total investment. Now, for those of you guys that trade with me, I trade Tesla, I trade SPX, I'll trade some of the bigger names, and everything else that's a lot cheaper in options premium. I try to keep, you know, my smaller companies like Apple, Nvidia, Microsoft, Meta, I try to keep them around $2,000, $3,000, $4,000. But obviously when I play the bigger dogs like SPX and Tesla, I will take my options premium, which means that how much I'm investing into the actual options play, take it anywhere between $4,000, $6,000, $7,000 max, right? I'm not a trader that's putting down $25,000 a trade and risking that. No, I don't like to do that. I like to keep my risk very, very small. So with that being said, just wanted to give you guys a quick example. So once we broke down here, got this initial flush, came down, tested this area, chopped around sideways for 10 minutes, flushed to the next demand zone, tried to make an attempt to bounce. See this? Where we got rejected at the supply zone, came back down, tried to bounce. Where, guys? Right at a level of supply. Once we flushed, where did we go? The next level of demand. I'll leave you guys with this note. Stocks are going to trade from demand to demand to demand to demand to demand. Stocks will bounce from demand to supply. So they will trade from supply to supply to supply to supply to supply to supply. And once we break supply, previous price action, and we break the high of day, we fly. That's kind of what you need to understand. So if you guys are serious about learning how to day trade, maybe you guys want access to my strategies, want to get access to the Discord, the private channels, the watch list, trade with other traders who are doing this on a day in and day out basis, make sure to visit evolutiontraders.com, become a lifetime member, get access to the Discord, like, comment, and subscribe, and I'll see you guys all next time.